Hey everyone, I'm Charting Man Dan with the Chart Guys. In this video, I'm going to go over a simple day trading strategy. We're going to call it the later morning trade, and we'll go over an example. It's essentially waiting for the direction to be dictated on the morning, not needing to rush on things, and then acting later in the morning. I'll show you how.
So with this trading strategy, it's essentially reacting. It's letting the individual name raise its hand and say, hey, here I am. I'm all bull or all bear. In this example, we're going to be looking from the bull side of things. But in 2022 bear market, there were plenty of examples on the bear side. So ideally, you just want to be going in the direction of the broader market to have confidence and conviction. So we're going to look at MARA, which is a crypto stock or a crypto miner stock, and to end November 2023. And we have a setup with a little daily bull flag, and with the bull break of 1263, it confirms, and there's a lack of resistance immediately overhead. And so we're going to use the replay function here, and we're going to do a little bit of a trade review. But if I go to the 15-minute time frame and say, okay, this is the first 15 minutes of the morning, I can clearly see, number one, bulls are in complete control. Number two, very solid volume. Volume is my prove it indicator, and this volume is telling me, yeah, this makes sense that we're going up this much because there's a lot of people buying. And I just compare the volume to the previous days. Look at Thursday's volume. It's not even comparable. And then you can go back to some other higher volumes. What stands out here? The high volume in the first 15-minute candle is not unusual. It's the high volume in the second and the third that is telling us there's some significant follow through here. So again, I can look at this and say, there's a number of things I can do. I'm going to try and short this momentum. No, I don't want to fight this market. We're in an area with a lack of resistance. I don't have confidence that I'm going to nail that top. I can chase it and buy now. No, that is FOMO. Where's my stop go? I don't like the risk and reward there. I'm going to patiently wait, and I know that the next time we see 15-minute consolidation, a higher low is the most likely scenario. So I will look to make an entry for that 15-minute higher low. And so I already know that. And so we're going to go over some messages in our chat room here. But the first one was later morning trade, and this is pretty much 15 minutes or 45 minutes into the morning. Later morning trade, MARA and Riot, 15-minute higher lows most likely after bull control all morning. So I posted that pretty much right after this candle had formed, a couple minutes after that. All right, now we just patiently wait. The trade has to come to us. If it keeps running, well, I missed it. So what? On to the next trade. But patiently waiting for that consolidation. So then we use our time frame, our multiple time frame analysis. If I know a 15-minute higher low is the most likely scenario, how do I identify that it's shaping up? I go to the 2-minute time frame because the relationship between the 2-minute and the 15-minute is nice and clear. And very often when the 2-minute downtrend, starts 15-minute consolidation, and when we reconfirm an uptrend, the 15-minute higher low is set. So I go to the 2-minute time frame and I look for bullish patterns. I look for an inverse head and shoulders, a falling wedge, just something that shapes up a trend change. And there are other signals that I can look for. If I get a confluence of signals, 15-minute EMA 12 acting as support makes me more confident as well. In this example, we're not going to get to 15-minute EMA 12 because of how strong we were. And so we've got the next candle. All right, consolidation underway. So now we're looking for, stop. So now on this consolidation, we're looking for a 15-minute higher low, and it's clearly underway. So I zoom in. So all right, MARA on watch for a 1 or 2-minute falling wedge to try and set the 15-minute higher low. So at that point in time, while the 15-minute consolidation is underway, I recognize, I made that post right about here because I recognize a 2-minute downtrend has confirmed and there's no follow through. And so I'm watching, is this a falling wedge to shape up a 15-minute higher low? Sure looks like a pretty good falling wedge. All right, that's now what I'm going to be watching for. So at that point, I drew the pattern. All right, here it is shaping up. And we then got a push down, and I grabbed some off the support line looking to sell partial on a break of 13. So on this wick, we drop down. And again, the characteristic of a falling wedge is you break support straight into a bounce. So we drop down, hit a new low, straight back up. So I buy that drop. Where does my stop go? At that point in time, my stop has to be based on a dollar risk because the very definition of a falling wedge is that we break support with no follow through. And so it would be possible to dip to 1284, reject from this resistance again, dip to 1282, and to keep playing out. So I can't put my stop right under 1284, but I could say, all right, I'm in a position. Let's just say I get filled at 1290. That's a pretty late fill. Anyways, 1290. Let's not make ideal scenarios here. I fill at 1290. I'm willing to risk 15 cents on this play. And so I'll put my stop at 1275. That's the dollar amount that I'm willing to risk. Maybe it's a half day loser. Maybe it's a day loser if I'm confident and aggressive. Whatever it is, my stop is based on dollar risk. As soon as we get back up over 1298 and break the lower highs, that to me says 1284 has to be the 15-minute high or low, or I'm wrong. I'm now playing off that stop. Because if we were to break out of this falling wedge and then hit a new lower low, red flag, this is not the setup that I was looking for. So I took a third off on that V-shaped bounce right to resistance. So essentially took a third of the position off. I did get a better fill than 1290. I got a fill at, I believe, 1288. Took a third off at 1294. So now what? What is that? It's a quick fill. So I stay in control of the trade. So now my break even is, if I'm in at 1288, now my break even is 1285. And so I can stick my stop, let's say 1282, tiny bit of wiggle room, and I have a very small amount of risk. And from there, the bulls prove their follow through, and we get, this is again an ideal scenario, 15-minute bull flag confirms, and we now have a really nice entry and can't lose. Some of our traders really like getting risk-free just like me. So now the bull break has taken place. I'm out enough. My stop's under 1284. I cannot lose on this trade. Where's my target? Well, we've had a lot of strength. I'm going to let this move play out. I think that this could be a 15-minute bull flag into continuation. The broader stock market is strong. Bitcoin is strong. And so we end up getting the bull break of 1318. I end up taking the rest of my profit on the runner position. I think I had half a position remaining at that point, and I took it off around the 1340s. I forget exactly where. I had to go run some errands, and it was a nice day trade. I'm locking that in. I'm going to stop paying attention now. And we did get a little bit more follow through and close strong, so I could have let that position ride further, but this was an ideal example for continuation. There are other times where this pattern will form an equilibrium, where we will pull back more significantly, and then we look for a lower high and then a higher low, and then eventually we break. In that instance, I do the same thing. I make my entry for the 15-minute higher low. I sell partial into the bounce, anticipating the lower high is most likely because the retracement size is more significant on consolidation. And then I let it play out. If it breaks bear, I stop out break even. If it breaks bull, I've got a nice winning trade. And so again, I'm either looking for the bull flag or I'm looking for the 15-minute higher low, and it's an equilibrium depending on the retracement size. So if you want more information about retracement size, Google ChartGuys Fibonacci, we go over it. I've also got a Tesla trade review. I've got a lot of Tesla trade review videos. Some of them are talking about this trade years ago, but using the 15-minute time frame in the 2-minute chart. So you can Google ChartGuys Tesla trade review, TSLA trade review, the ticker, and those will come up as well. But this is one that, you know, I've been using this trading style a lot because a lot of people, myself included, oftentimes I don't like trading the first 5-10 minutes because I'm not confident. Again, it's, you know, I have to predict a little bit. Are we heading up first thing or are we going to consolidate first thing? Versus reacting after the market has shown me I'm bull. Here I am. I'm bull. Higher low is most likely. In the first 5-10 minutes, I don't necessarily have that same kind of confident, most likely scenario to give me a pretty solid conviction on a trade setup. So I highly suggest playing around with this one. And again, you got to be, you know, using that 2-minute time frame to ensure you're not entering too early. And you got to be using that stop loss because there are definitely times where the 15-minute consolidation, you know, will retrace 75% of the move. And that's much more than I thought it was going to be. So we always have to remain protective, but this is a very worthwhile day trade to be keeping an eye on. Just start observing it, start practicing with it, and see if it fits in with your style to add it into one of your trading strategies.